Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Look, the Fed screwed up again. It's basically assured us a recession, as we've been saying. We're going to get into the data and details as to why. You're not going to want to miss this, so let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Well, Bob, the Fed doesn't have the best track record, and they've done it again. Can you enlighten us?
Yeah, Phil, the Fed always overplays their hand, either to they're too tight for too long or too loose for too long, and they end up really causing these recessions and these crack up booms. And this time the bond market is telling them, screaming at them. That's why everybody's looking for pause and pivot, saying that to your note is usually the end all be all in terms of direction. And then the Fed has overshot that. And the chart I'm going to show you is a history of these overshoots. So let me throw it up here real quick so we can take a look at it. This chart you can McClellan oscillator. It's a great resource for you guys. But if you can see here, he annotates when the Fed has screwed up, and basically they keep the punch bowl out too long, and then they don't give you the aspirin for the hangover till it's too late. So in this case here, they're just killing us with these higher interest rates. Now, he has all his reasons for it. This time I'm going to come to his defense a little bit, because what we don't know yet, Phil, is how the 2-year yield is going to react when Janet Yellen has to sell $776 billion in new Treasury offerings once the debt deal has been secured. And we could see that 2-year jumping up to his level. And I think he might be waiting on that to see what the market is going to hold for us there. And so that's why I'm waiting and watching for it. That's why I think it's a big mistake for people to kind of front run this move and say, hey, he's going to pause or he's going to pivot. Now, if we're in the middle of this debt deal throughout the summer, which is a distinct possibility, we can go for 6-8 weeks, we can have a situation where he may pause until that's done and then evaluate how the market's going to react to Janet Yellen going back into the market. We know, because liquidity is going to dry up, that we know is probably going to be very negative for the market. I think it's going to be negative for macro, but we don't know how high it's going to push the 2-year yield up, Phil. And I'll throw it back to you.
Yeah, no, Bob, I would totally agree. I think everything's set up for a very negative second half of the year with the debt issuance and everything like that, because it's going to mimic Q1 of 2022. And if you guys aren't familiar with that, go back and look at the chart on what happened there. But same situation, Yellen was out of money. She was able to reissue a bunch of debt. Exact same scenario. I think we're going to probably see some negative reactions initially with the debt ceiling fight. I think there's going to be a fight, and I think there probably is a partial shutdown. And I think there's going to be an initial pop when it gets resolved, but I think that's a pop you fade, because ultimately, like I said, the debt issuance begins at that point, and that always has a negative effect on the value of the stock market, and then probably goes down into June, July, if I'm guessing right, and then we'll see what happens from there. But I wouldn't be surprised if we see a significant pullback into that, where people are starting to get worried about, like, how low does that go again,
Definitely. Look, Powell blew up the market in 18. It blew up the market in 20. They're going to blow this market up again in 2022, and they're going to blow it up again in 2024. So just guys, just be really careful here. And look, Bitcoin's down today. The market's really funky today, and you just can't get the market any higher. It's like floating, like a helium balloon that can't get any higher, Phil. So there's no upside for you guys to worry about, so you might as well protect your downside. And with that, I'm going to let you guys go. I'll see you later. Thanks a lot, Phil, and catch you guys all tomorrow.
See you guys later. Bye.
Trade Genius.